Ladies and gentlemen, good day and welcome to the Q3 FY24 results conference call of GHCL hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Meet Vora from Emkay Global Financial Services. Thank you and over to you, sir.
Thank you. Good evening, everyone. Thank you for joining us on GHCL's Q3 and 9 months FY24 results conference call. I would like to welcome the management and thank them for giving us this opportunity to host them. We have with us today Mr. R.S. Jalan, Managing Director, and Mr. Raman Chopra, CFO and Executive Director of Finance. I shall now hand over the call to the management for their opening remarks. Thank you, and over to you, sir.
Thank you, Mr. Vora. Good afternoon, esteemed investors, and welcome to the GHCL earnings conference call for the third quarter of FY24. Please note that the results and the accompanying investors' presentation has already been shared. I am pleased to be joined by Raman Chopra, ED and CFO, and Manu Jain from the IR and finance team. Before we discuss about the details of our financial performance, let's take a moment to assess the current market conditions. The global soda ash market continues to face challenges with the oversupply situation, resulting in higher exports to Asian regions, including India, and impacting prices. In Europe, high inflation has dampened the consumer sentiments, leading to weaker export from Turkey to Europe. Further, the real estate market in China remains subdued, along with the additional 4 million metric ton natural soda ash capacity coming into operation. Despite these challenges, during 2023, China's import of soda ash exceeded its export, indicating strong domestic demand uptick from emerging sectors such as solar glass and lithium carbonate. This is expected to drive China's growth by 5 to 6% for 2023. Looking ahead, while we anticipate the global market to remain challenging in the near term, a potential decline in inflation could spur demand recovery in 2024. In India, while demand is relatively stronger compared to the global scenario, higher imports have resulted in oversupply and pricing pressure. This trend may persist for some time, impacting domestic prices and our margin accordingly. Regarding our operation, the previously announced maintenance shutdown was undertaken in October 2023. This has resulted in a production shortfall of approximately around 20,000 metric tons in this quarter. Despite the current market challenges, our current realization is better than pre-COVID period. However, it is lower than FY23 performance when we had experienced an exceptionally strong business tailwind with a peak realization and margin. Looking ahead, our EBITDA margin may remain at the current level for next few quarters due to temporary disruption in the global business cycle. In the medium term, we expect prices and margin to recover, which will add our performance. With a strong balance sheet, significant corporate actions, and disciplined capital allocation approach, we remain well positioned to face these challenges. Our growth momentum will reunite once demand rebounds, and we are committed to implementing a strategy that will drive our growth trajectory. Our greenfield project is facing some delays due to pending approval from authorities. However, we are confident of securing these approvals at the earliest. Despite this, we are making progress with the basic engineering and other project-related activities. Additionally, our expansion initiatives focusing on vacuum salt production, enhancing salt yield, and digital transformations are underway, which will enhance our capabilities over time. Now I will hand over to Raman, who will provide further details on our financial performance. Following that, I look forward to addressing any questions you may have. Thank you.
Thank you, sir. Good evening, everyone, and a very warm welcome to our Q3 FY24 earnings call for the quarter and 9 months ended December 31st, 2023. The performance for the current quarter reflects the global soda ash and chemical sector sentiments in India. These factors are very well covered by Mr. Jalan in his opening remarks. I will now share the impact on our financial performance. Revenue for the quarter came in at 813 crore compared to 1,107 crore in the corresponding quarter of last year and 817 crore compared to Q2 of this year. The reason for this fall is mainly due to reduction in soda ash realization from Q3 FY23 on account of prevailing market condition and increased imports. In FY23, we had witnessed exceptionally strong business tailwinds leading to peak realization and margins. EBITDA for the quarter stood at 165 crore compared to 372 crore in Q3 FY23 and 224 crore in Q2 of current year. For the quarter, EBITDA margin came in at 20.3% compared to 33.6% in Q3 FY23 and 27.5% in Q2 of FY24. Low realization have now primarily impacted the margins. Also in Q3, we have incurred additional repair and maintenance costs due to plant shutdown. PAT from the continuing operations stood at around 100 crore compared to 254 crore in Q3 FY23 and 143 crore in Q2 FY24. For 9 months ended 31st December, we generated a cash of around 511 crore in cash profit after taxes. We have utilized around 131 crore for repayment of debt and 86 crore towards the capex. Capex for FY24 is lower than anticipated levels due to slower progress in greenfield project, which will now be shifted to early to FY25. Our working capital has reduced by around 210 crore, mainly due to raw material and stores and space optimization. Our net cash surplus stood at around 625 crore after reducing a debt of around 217 crore. With this, I conclude my comments and would now request the moderator to open the forum for question and answer. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Simranjeet Bhatia from Elements Financial Solutions. Please go ahead.
Yeah, thank you for giving me the opportunity. Sir, I just want to understand till how long your EBITDA margins of 19% will remain in the upcoming quarters, and when we can expect the revival in the margins going forward.
You see, basically at this point of a time, giving a timeline will be very difficult. As I mentioned in my opening remarks, that currently there is an oversupply situation in the global market and primarily in the US and Europe. So the moment the Europe recovery happens or the inflation goes down and the demand picks up there, that will have a trigger point for the upside into our business outlook. Second, also, as you know that, and I've just indicated in the China, there is a very spurt demand into the solar and the lithium carbonate. And we are hoping that kind of a demand also picks up in the Indian scenario because a lot of new projects are underway for solar and solar plants. And so if once that comes into stream, probably that will also spur the demand of soda ash, and that will ultimately likely to improve the market situation of soda ash.
Sir, and what percentage of GHCL revenue came from from the Europe region?
No, our revenue comes only from India, but basically because of the slowness into the demand into the Europe, the material is flowing from Turkey and USA, which are the major suppliers, one of the major suppliers to the Europe. That material is getting diverted to the Asian countries, and India is one of them.
Got it.
Currently, around 1 million ton approximately around 100,000 tons of the import is coming every month into India, and that is depressing the price.
Okay, got it. Done. Thank you, sir. Thank you.
Thank you. The next question is on the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yes, sir. As you alluded to the Namaskar Jalanji, Namaskar team, and thank you for this opportunity. Sir, as you alluded to this unabated import, so you mentioned 1 lakh per month is the current run rate of import?
Yes, approximately, Saket, the current import is coming around 1 lakh ton. Up to the stage of around 60,000 tons, the Indian demand do require. Beyond 60,000 tons, the metals are in excess supply to India, and that is definitely kind of leading to a pricing pressure in India.
Sir, taking into account the annual shutdown we took for this quarter, what were our utilization levels, sir? Q on Q, if you could give the number for September quarter and December quarter.
Sorry, can you repeat your question again?
Sir, I am looking for the utilization levels for this quarter.
Saket, as you know that other than this 20,000 tons, broadly our utilization remains at a normal level. Okay. So there is no kind of a production cut other than the annual shutdown. So, and generally if you look at the whole year as a whole 9 months, probably will be in the range of around 92-93%. And if you remember that in the early part of the first 1 or 2 quarters, we had that breakdown, if you remember that I had mentioned in my earlier call. So because of that, this year, as of now, in 9 months, approximately 92% kind of a utilization we have, which is likely to kind of in next quarter, which is the fourth quarter, this will improve.
Okay, so this number of 91, 92 will be in 96, 97 vicinity for the fourth quarter, 4 to 5%?
Generally it should be, but see, a very specific number, it will be difficult for us to give you the specific number. Generally, yes.
So, sir, if just to happen over the point, since it is an annual shutdown quarter, is it likely to be comparable on year? मतलब last year December quarter से volume terms में से compare किया जा सकता है?
No, Saket, because last year we did not have the annual shutdown. Because annual shutdown normally we take in 18 months time, so it cannot be compared.
So volumes were higher for December 22. This is what my point.
Yes, December 22 the production was higher as compared to December 24.
Okay. Sir, what should we look then into the increase in inventory? Is it the raw material inventory that we are holding on, or the finished goods to the tune of 70 crore for the 9 months? What does this indicate?
See, if you look at in terms of the last year, December 23 versus December 24, primarily inventory of finished goods definitely has gone up. And but if you compare as compared to the last quarter of Q2 of 24, the inventory is almost on the same level.
Come again, sir. I missed your point.
No, what I'm saying, Saket, is that if you are comparing with the Q3 of 23 inventory, the inventory of Q3 24 has gone up because the market was very, very different into the 22-23. Because of that, the inventory was much lower. However, if you compare the same with the Q2 of 24, the inventory is almost at the same level.
Okay, sir. And sir, you did also alluded to the fact that the benefit of lower raw material prices will be accrued in the quarters ahead. So for this quarter, the raw material prices are not aligned to the decline. That understanding is correct, sir?
I would say 2 things, Saket. On one side, because of the annual shutdown, a lot of cost gets built up. Because of low production, your cost goes up either in terms of maintenance cost, even the power cost also goes up because your production is lower, whereas it is not a direct variable cost. So that's the one reason. And second, as you rightly said, the full benefit of the lower value of the raw material will get accrued in the coming quarter.
Okay. And sir, last point before I join the queue. So when we heard you today in two of the interviews to the leading news channels, you did alluded to the fact that now we are looking at this EBITDA margin of 20% going ahead. I think so, sir, in my recent memory, these are historically the lowest margin, EBITDA margin. So firstly, on this front, if you could give that, is it the mean reversion, since you are also referring to pre-COVID margins and those levels? So are these permanent mean reversion which you are observing, and now it's going to be 20% and in this bracket only, or what are we trying to explain by this 20%?
I will explain that, Sakeshji. First and foremost, if you look at our EBITDA margin in terms of the per ton, probably if I look at last couple of years, you will find that EBITDA margin are on a normal level. But when you compare in terms of the percentage, since our realization is elevated at this point of a time, and because of that, the margin percentage looks to be lower. So, however, the margin per ton is almost at the same level what it was pre-COVID level. That's not what I said. Number one. Number two, as I said, my oversupply situation is there. Definitely, that is putting a pressure on the margin also. And once this pressure gets released once the Europe demand picks up, automatically the margin will also improve. Historically, we had an EBITDA margin of around 30%. And I'm sure that after a few quarters, maybe end of 2024-25, probably improvement will start. You will start seeing the improvement into the margin percentage as well.
Correct, sir. Right, sir. And for the volume part for the next year, you alluded that we are looking for a volume growth of 5 to 7% on what we will be exiting this year post, since there will be no impact of.
Yes. There are two things will happen, Sakeshji. On one side, the annual shutdown will not be there, including even the small. We are assuming that there will be no breakdown, and because of that, our production should be higher, which we have achieved in 22-23. We have achieved a higher production than what we are likely to achieve this year. So we are assuming that the similar volume we will be able to achieve next year in 24-25, and that will give you a 5 to 6% kind of a volume growth into next year. With that, if the prices improves, which should, according to me, then probably this will help in terms of the revenue growth as well as the margin growth. But for that, maybe probably few quarters we have to wait.
Okay. Sir, may I ask one more point and then join the queue, sir?
Please do that.
Sir, you have in your presentation articulated the fact that for European players, we are expecting some reorganizing the capacity. So for China, sir, you have very correctly mentioned in previous calls also that China will not be affecting the world market. Their capacity and their expanded capacity will be met internal consumption through the renewables. That has worked. But what are we trying to explain in terms of this European players getting reorganized the capacity? If you could throw some light.
See, if you look at in the last call also, I have mentioned that Solvay has mothballed they have reduced one line into European in the European factory. So we are assuming that in the likely scenario that Europe, because of all environmental issue in terms of your carbon cost and things like that, probably some reorganization will happen further into the European market as well.
So there will be further reduction in capacity utilization, permanent we are expecting. That will balance the market.
Yes, it should happen. It should happen. That is what our guess, our understanding about the business is.
Okay. Right, sir. And last point about, sir, our utilization of cash, sir. I think so earlier when we were at the peak of the cycle, at that time you did allude to the fact that because of the corporate action due, we were unable to return cash to investors. And then came the reversal in the prices and today's current environment where the vision ahead is alluding to lower margins. So what should be investors penciling in now in terms of, I think so we have a cash reserve of around closer to 800 crore and net of the working capital debt, it is around 625 crore. So what is the current thought process and what would be the opportune situations or the factors that will allow you to proceed with a buyback? Since you have very well explained to us that buyback is always a tool which will be used by the management to reward its investors. So one was an extreme point when the margins were superlative, huge cash flow. Today we are looking at lower margins. We are looking at a big capex also going ahead, but still we are debt free. So if you could give us some guide, some understanding whether buyback is there going ahead in the near future, whether the things are aligned, or we should look for the growth trajectory for the company for the coming 2 to 3 years, and that's what should be our investors and what should investors anticipate in terms of this factor, sir?
Yes, Saketji, let me say two, three things. One, I'm sure that investors like you must have seen the journey of our rewarding to the shareholders over a period of time. 2 buybacks, liberal dividends, and we are very clear in our mind is that our shareholders must be rewarded. But in the case of reward, I would only say that is it the right way of returning the capital to the shareholder is the right way, or whether we should deploy these resources in a meaningful manner so that we can generate extra buck for the shareholders. Keeping that into mind, we are looking at many opportunities. And it is a matter of time, something where there is this opportunity of growth. Because see, ultimately, growth is something which every investor would like to have from us. Of course, we in last couple of quarters, we have not been able to do that. But in a hurry, we don't want to take any decision of returning the money to the shareholders and compromising on the growth. I'm not talking about the greenfield project only. I'm also talking about inorganic growth. So keeping that into mind, we are just keeping a patience on the process. But if we don't find any opportunities in the near future, probably we will go back to our board and go back to the shareholders of rewarding the shareholders. So the rightful decision will be taken in the longer term interest of the shareholders. That will be my objective.
Sir, I would like to join the queue, and operator, please allow me for a second opportunity. Thank you.
Thank you. We'll move on to the next question. That is on the line of Radesh Gandhi from Discovery Capital. Please go ahead.
Hi, sir. So just a question, so is this slowdown which you're seeing in terms of prices, is it all demand-led, or is there also some amount of incremental supply which has come on stream? Because, there were a few articles about some incremental supply in China, etc., but I guess you're indicating that may not have happened. So just want to understand if it's only a demand issue or also it's a supply issue.
So, Riteshji, as you rightly said, it is a combination of demand as well as supply. Okay. Now let's come to first is the supply side. The major expansion which has happened is only in China. Major. Okay. Some expansion also has happened in Europe, but this is that is not a very major one. In spite of such a large capacity coming into China, in spite of that, this year they had net importer as compared to the exporters in last 9 months. So this indicates, and the demand growth till 9 months is around 7 to 8% in China. So keeping that into mind, supply to that extent, I would say, is not kind of a big concern at this point of a time. However, some supply in Turkey has increased, some supply in Europe, US has increased. And because of this combination and the slowdown in the demand in Europe and some part of Southeast Asia and some part of South America also, like Brazil, these countries, the demand slackness has seen. So because of this, there is an oversupply. The major metal which is coming into India is primarily from Turkey and from US. Out of this 1 lakh ton which I am saying, most part is coming from these 2 countries. So once the Europe demand slightly picks up after this interest, the inflation becomes lower, then things will become normal again.
So the other question was keeping that in and given the excess supply which has come on stream and other announcements which may have happened, what's giving us the confidence to go ahead with the greenfield actually expansion?
No, Ritesh, you are 100% right. And let me tell you, we are very optimistic about the long-term demand of soda ash. And because being an Indian player, because one thing which we realize is in the long term, domestic demand has to be met by the domestic supply, because that's the most competitive way of supplying or servicing to the customers. This is a short-term pain which is happening because of excess or the demand slowdown into the Europe and US or the southern market, Southern America. The way, like if you remember last time also I mentioned to that in India we are looking for a demand growth from 4 million ton to 7 million ton in next 7 years time, 6 to 7 years time, and that's for sure. You know that the big players like green hydrogen, your green ammonia, you talk about your solar investment by many players, or you know recently in the government of India in the budget, interim budget, they've announced the rooftop solar in a big way. Okay, and I would say that the way I personally believe that demand will pick up very significantly in India, and we have to be ready for that. We cannot wait for the demand just to happen, and after that we start talking about the supply, because supply takes time. You know that last few years we are working on this project of a greenfield project. Still, some approvals are still pending on that. So we are preparing ourselves to be ready for the demand uptick which is going to happen, and I'm very sure on that. That's the reason this year we have signed another investment with the government of Gujarat, and now we have announced 1 million ton capacity on that location.
Got it.
And this will happen by 2020. Of course, we will be going in a modular form. First, we will go for 500,000 ton. Then we will go for another 500,000 ton. But we are readying ourselves for this opportunity to capture by us.
Got it. So, and the other question is that, given the large increase in freight rates and given, imports is what is ultimately impacting the prices, and therefore the landed prices should logically go up. Are you now starting to see a certain amount of uptick already? I mean, just given by freight, let's leave everything else aside.
Yes, I would say that some amount of uptick in the freight has been seen, and this probably has two impacts on us. One, on one side, as you rightly said, the import will become little costlier, and that we are seeing at this point of a time, and therefore some slowness in the barring the contract which has already been done by the buyers in India from import, that is happening, and maybe some kind of a slowness may be seen in the end of February onwards. So that's one. But on the other side, there is a negative part also. Lot of our glass manufacturers which are getting exported, like a fashion glass or those kind of a thing which are getting exported to Europe and other countries, there also some demand impact is there because of this freight increase. But still, overall net, this will definitely have some impact, positive impact onto our demand in the soda ash.
Good, sir. And the last question I had was that for the greenfield, I know you guys have alluded to on the previous con calls about exploring other areas, and it's not only now, it's been over the last few years. Is there anything imminent? Because then otherwise, in the absence of that, better use of capital would be as per your policy to sort of at least do 25% payout, either in the form of evidence of buyback. So in the absence of anything, given there isn't anything appearing to be happening, would that be appropriate, or how should we be looking at that?
See, talking about very specific numbers will be difficult because this will all be subject to the board approval